Hello to all traders and welcome back to another market review brought to you by Orbex. So we're just taking a look on the yellow metal again after having a little bit of a firm resistance just above the 5100 area, which we're just pointing out on the chart at the moment. So it seems that gold traders are back in the market but not really heavily invested, because we are seeing a nice break above 5,000, which was confirmed a few trading sessions ago, but since then haven't really found that big momentum on the intraday chart at least. We're just waiting to see now if any big fundamental impact news is going to move it higher. Geopolitical risks are still simmering around the world. You know, we've got talks going on between Russia and Ukraine that have been a little bit progressive, but not as progressive as some would have liked. We've got the Iran situation where Donald Trump still keeps on pushing his button further and further down, and it's looking likely that that's not going to go away anytime soon. So we've got Middle Eastern tensions as well still happening. So we are looking for another climb on gold, but it could just be a little bit of a sticky climb, gradual, not like we have seen in the last few months where it's just shot up from 4,000 to 5,000 over the a period of a few months and then declined quite significantly since then. So I'll just keep a lookout on the geopolitical factors moving gold. We're understanding that central banks are probably going to keep buying gold into this year, but maybe not as progressively as they did last year. So this could have a little bit of a slowdown as well. But we are expecting gold to still start peaking and gaining momentum as we go into the second and third quarter of the year. Just might be more gradual than expected. After progressive non-farm payroll numbers as well yesterday, we're seeing that America is slightly getting back on track. So this could actually have a bit of a dive on gold as well. Well, on that news, gold did dive $40 to $50 before stabilizing. But at the same time, does that mean that the Fed are going to hold off cutting rates, especially as the inflation data tomorrow is expected to decline as well? So lots to sink our teeth into, lots to have a look at. But for now, like I said, 5,100 is the target to break. And if we get a confirmation break above there, then we can potentially start talking about another record high to move $300 to $400 higher, which isn't really out of the realm of possibility. We've seen it time and time again, so we could see it this time around as well. Just want to take our attention to oil as well, because, you know, as I said, with the geopolitical factors weighing in, we're seeing oil having a gradual climb now and getting back towards $66, which was roughly about the targets beforehand as well. If we go back on the daily chart where we've seen oil sink quite significantly, we did have a spike roughly around the mid 66 area before capitulating lower a few dollars to hold this psychological area of around $60 to $61. But since then, prices have been very choppy but progressive, you could say, because we are moving that much higher now. So on the intraday chart, we are seeing now that prices are seemingly looking a bit higher. The RSI and other stochastics and MACDs are neutral at the moment, not really giving us too much of a selection of signals. So we're just waiting to see now, purely fundamental, if that's going to start moving higher and how much higher it's going to go as well. Are we going to get back to $70, $80? Is it going to pop to $100? Well, obviously the geopolitical tensions and risks, I need to say that word correctly, need to start ramping up before that does happen. So as always, we'll bring you all the latest as it happens, if it does happen, and we'll be back next time around. So thank you very much for joining me, and speak again soon. Bye for now.